what's interesting is an institution like BlackRock doesn't go into things lightly. Don't forget, they started talking about this in 2021. So we knew they were coming. So I imagine they've probably been in this space since about 2017. And they've done the research and the work and everything else. Now, a lot of people say, well, BlackRock's got X trillion dollars under management. Yes, but that kind of a lot of it's index funds and stuff like that. It's not like Larry waved his fist and said, let's buy $10 billion of Bitcoin. That's not how it works, right? It's a customer-driven business. They have demand, they sell it to their customers. So it was interesting to see somebody of that seniority at that level of the finance industry talk about the flight to safety. These are things you're not supposed to talk about, but BlackRock's not a bank, and the sort of thing Jamie Dimon can't talk about.
BlackRock is poised to make an extraordinary impact on the world of Bitcoin, a development of immense significance. In a recent interview, Larry Fink, the CEO of BlackRock, made it clear that the financial giant intends to bring a substantial influx of institutional capital into the Bitcoin market. Fink's endorsement of cryptocurrencies as a flight to quality speaks volumes, coming from one of the world's most influential and powerful financial figures. This statement underscores the growing acceptance of digital assets as a safe haven for investors and signals a shifting paradigm in the financial world. What makes this announcement even more noteworthy is the impending deadline for the first Bitcoin ETF application, set for January 10th, less than 3 months away. With leading analysts at Bloomberg attributing a strong 90% likelihood of approval, the stage is set for a potential watershed moment in the crypto sphere. In his latest interview, Raoul Pal offers an in-depth analysis of BlackRock's forthcoming involvement in the Bitcoin space and its ramifications for the broader crypto ecosystem. As we venture deeper into this evolving landscape, it becomes evident that the cryptocurrency market is standing at a crossroads of immense consequence. BlackRock's entry not only bolsters the credibility of cryptocurrencies, but also holds the potential to reshape the global financial landscape. To gain a comprehensive understanding of the unfolding scenario, it's crucial to stay engaged until the end of the video, where Raoul Pal provides his expert insights on the current state of the crypto cycle and offers a glimpse into the future of the industry in 2024. We find ourselves on the brink of a transformative era in finance, with Bitcoin leading the charge.
So how I frame this, again, there's a lot of noise online from people who haven't been in the financial systems, like BlackRock's going to own all of the Bitcoins. It's not. It's a client-driven thing. It's a fund.
Right.
And you buy a share of the fund, and that gives you your access to Bitcoin. It's not like they kind of run you into all of this stuff. But how I think about it is we've got two worlds out there, TradFi, crypto. And the ETF is probably, I think of the crypto world as like a digital nation state in that kind of Balaji idea. And what we're building is a trade agreement. So you can get direct investment from the TradFi world into the crypto world. So these are kind of trade agreements. This one, the ETH spot ETF, and that allows money to come into the system, which the system desperately needs right now because the crypto economy has not been growing. Yes, we might be in crypto spring, so it come off the lows, but the economy's slow. We can see it everywhere. The activity is not great right now. So what you need is some new investment. And that's what this does. It's a trade agreement between TradFi and crypto, but doesn't mean that anybody's going to actually do the trade. They need to, just because we've got an ETF, just because Larry wants to sell it to his customers, doesn't mean the customers want to buy it yet. So we have to wait and see. It's like we saw with the Van Eck ETH futures ETF. They did a big marketing campaign, did everything, almost zero volume. I think it's exactly where it would be after you've just gone through winter and it's a bit of spring. So if you think of what spring is like, one day's raining, one day's sunny, one day, it's like, it's a bit meh, Yeah. And so ETH, there's plenty of stuff going on. Activity's relatively slow because NFT market, which is a big part of the ETH, is in its bear market because it's an asset. It lags the ETH economy, like houses lag the US stock market, stuff like that. So it's relatively slow, but still it is the broadest based and deepest economy of all of them. Yeah. So for me, it's just like, new stuff will come, new opportunities will arise. Yeah, I mean, it's been quite a long winter. Although, most of the space bottomed in October last year. ETH bottomed in June. Then most of the space bottomed in October, and some alts are still bleeding now. So that's almost a year since the bottom was in. Well, it is a year since the bottom was in. So I actually think of these as 1 year down cycles, 3 year up cycles, with the first year and a half being kind of spring-like, and then we go into summer, and then we go into fall. So that all lies ahead for me. And it just feels that we just need a bit of liquidity to come into financial markets. We need any trigger. Maybe one of the banks struggles and the Fed has to do something. Maybe the Fed decide that, yields are getting too high now. We'll need to cap them with yield curve control. Or maybe they just see inflation falling fast and they start cutting rates. But all of that feels like it's coming into play, and the crypto market will start sniffing it out early. So if I look at most of the larger blockchains, they all have some underlying economic value being transacted. There's transfer payments, transmissions, all of that kind of stuff in XRP. There's been lots of things from DeFi to NFTs coming out of ETH. Bitcoin is its own thing, the store of value narrative, etc., etc. So we see that it's just not broken out to the big application.
Right.
Don't forget, when I got into this space was 2012, I said, well, the financial system's going to go on blockchain rails. Here we are, 11 years later, we're still not there. We're just starting, right?
Yes.
But yes, it is going to go there. We see all the banks talking about it. They're all working on, they've got huge blockchain teams to figure out. And I was with some people last night here in Miami. It's like, the other issue is, well, if JP Morgan uses one blockchain, let's say they use XRP, and Goldman uses ETH, well, how the hell are they going to move the assets? So then you solve interoperability, because it's too much of a career risk then to choose the wrong blockchain if they don't solve that. But different blockchains have different attributes and will be good for different things. So my view on this bull market that lies ahead whenever it comes is it's more of an everything, everywhere, all at once bull market. Because it's my belief that a lot of people have been working on tokenization of real world assets, so the financial system. We've seen a lot of people experimenting with what we can do with NFTs. There's some big breakthroughs, like Solana can create 1 million NFTs for $100. Okay, well, that means we can do ticketing. You're from the music industry. Why is that not all? Why do the tickets that we stick in a drawer to prove that we went to an amazing concert 20 years ago, why is that not an NFT? Of course it should be. And what can we do with that? Hotel rooms, all of that stuff. So we've got that with DeFi. DeFi is probably going to split between KYC, AML, DeFi, because the institutions want to get involved, but they can't because of regulatory problems. And then there'll be non-versions of that. And then we're seeing a lot of brands and other people coming into the space and sports teams and that kind of stuff. So I think all of this plays out in the kind of 2 or 3 years ahead. Yes, I mean, the adoption of new technologies takes time. We're just not used to the fact that individual investors can act like VC investors and be at the early stage. And then we have to deal with this being real time and a complete shit show of volatility, rumor mills, scams, amazing projects, game-changing, world-changing things, all thrown together in this melting pot. And we're trying to figure this all out. So it's kind of hilarious to see that that's what it is. But it does take time, and it's the world's meeting, and it's always this thing. So, we've talked about the tokenization of real-world assets. We've talked about the regulation and how TradFi is bridging the gap. They understand. So that merging is on its way. What you need to get to less volatility is this applications layer. You need the use cases and lots of people. Because right now, the markets are very small. So a sell order, even if it's just a random sell order because somebody has to do something, can move the market a lot. And then it liquidates these stop losses and blah, blah, blah. So everything is like everybody's screaming and shouting all day in crypto. That volatility will die down when you get more participants. So you've got more buyers and sellers in the market at every one day, which is like the AMM system we were talking about is on XRP. But there's a lot of people in the markets providing liquidity at all moments, different use cases providing activity. Once you've got that thing, you've got something much more mature. So I don't think it's the monopoly of the banks per se. I think it's the fear of change when the system is so fragile as it is, and the fear of change from the US government and even the central bank, when they're basically just papering the cracks or putting the finger in the dike to stop it exploding. I think they're worried about what cracks they open by allowing different systems of money, value exchange, etc.
In a thought-provoking discussion, Raoul Pal delves into the potential consequences of BlackRock's entrance into the cryptocurrency sphere. It's becoming increasingly clear that momentous changes are looming on the horizon. With prominent figures like Larry Fink validating the cryptocurrency movement, the stage is set for a transformative period in the financial world. The fusion of BlackRock's vast influence with the cryptocurrency space is a fusion of traditional finance with the innovative digital realm, and this synergy has the potential to redefine the way we perceive and interact with financial assets. As we look ahead, the next few months will hold unprecedented significance in molding the financial landscape. BlackRock's involvement in the crypto space not only lends credibility to digital assets, but also has the potential to accelerate their mainstream adoption. It's a pivotal juncture where the convergence of traditional finance and emerging technologies is set to shape the future of investment, wealth management, and financial innovation. Whether you're a crypto enthusiast or a traditional investor, these developments demand our attention as they have the potential to reshape the very foundations of the financial world. As we navigate this exciting yet uncharted territory, it's crucial to stay informed and keep a watchful eye on the evolving landscape. The collaboration of BlackRock and cryptocurrency is not just a trend, it's a significant inflection point in the ongoing financial revolution. Raoul Pal's insights provide a valuable perspective, shedding light on what lies ahead and the potential opportunities and challenges that this new financial era may bring. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.